ICOs and AML Regulations. How can ICOs protect themselves and remain compliant with all anti-money laundering regulations? Jan Sammut, ICO Launch Malta. Grant Blaisdell, CMO Coinfirm. John Caldwell, BDE CasinoCoin. Loretta Joseph, Paradigm Global. Moderated by Kelly Fenech, WH Partners.
Everybody, thank you very much for coming. Today we're looking at ICOs and AML, and we've got a very exciting panel to discuss the topic. To date, the cryptocurrency market is at an inflection point, as it's mainly driven by early investors and private investors, and we're not at the stage where it's truly open to more regulated financial entities. One of the main reasons for this is because KYC and AML have proven to be a real challenge for cryptocurrencies and ICOs. Grant, I'd like to come to you and ask, how are ICOs solving these channels so they can play a more value-added role to the ecosystem?
Well, I like getting kind of out of theory and going into straight practice.
Okay.
So especially at conferences, I think that's needed a bit more. So we've serviced about over 70 ICOs in the past 9 months when it comes to AML. Unfortunately, there's quite a bit of miseducation, both by some service providers who are actually KYC providers, but they structure it as KYC AML. The ICO end, most of them are not, let's say, educated enough to differentiate these differences and understand the nuances. So part of it's the education aspect. Most importantly, I'll give a straight use case of a pretty big ICO we serviced, British one. They raised $20-something million. I know the guys personally. I was talking to them before, and while they were doing it around AML, they're like, well, listen, the regulator's not forcing us to do it right now. I said, okay, buddy, I'll see you in a bit. About 2 months after they finish their ICO, they come back to us and they say, hey, so we'd like to do those AML checks and reports on our contributor wallet addresses to protect ourselves from the regulator from coming back to us, and can you help us get a bank account? So what's happening in this space, for the most part, is a lot of these companies don't understand that if they don't do the proper source of wealth risk analysis as far as the funds that are coming in, not just the identity of the person, but the funds coming in, that then they're severely limiting and risking the future of their business as a whole.
You mentioned something very interesting in regards to the risk assessments. As per the fourth anti-money laundering directive, it's now mandatory to carry out risk assessments. There are certain pillars such as customer, jurisdictional, product, service, interface risk. I know Coinfirm, you've examined many different types of risk indicators.
200 of them.
200. I would like, don't go into all of them because we definitely don't have the time, but if you could let us know about how you go about assessing these customer risks in the customer onboarding process, what you would look out for.
Well, two things to that, and I want everybody here from the traditional system who's kind of on the wall about this, who's talking about AML, and they think it's a big money laundering operation in crypto. The truth is if you understand this technology, how to analyze it and how to assess it, and how we deal with regulators, we say, listen, we understand your worries. Here's a solution for that, but most importantly, this is a solution that exceeds any capabilities or abilities of the traditional system to be able to address that factor. So that's a very important thing to kind of relay. What was the second part of your question? I'm sorry.
The risks, exactly what you would look out for when you're assessing a pillar of risk, maybe jurisdictional, customer, any indicators, red flags?
Well, when it comes to the AML aspect, how we've approached is build pretty much as high of a global standard as possible. And then that covers about 90-something% of the jurisdictions around the world, excluding a few that you don't want to mess with anyways. When it comes to the risk indicators itself, crypto is a very unique kind of environment. You have things that are happening in it that never existed in the traditional space. They don't know how to assess it. So mixers is one. Transaction being found on the deep web on a drug market. These are things that some analytics companies can pull out, but what do they put it under as far as an AML framework for the client?
Building on that, Loretta, you also have 25 years experience in financial markets and have worked with major investment banks. And this is what I want to ask you, because for the banking system, source of funds and source of wealth is crucial. And I would like you to elaborate about how you would go about determining source of funds and source of wealth for a customer to the audience.
I don't think being a banker for that many years is good. But the source of funds, it's like when you bank accounts, you need to be able to work out where this money comes from, because isn't that what anti-money laundering, AML, KYC does? It's stopping the things that we're, terrorism financing, child pornography, terrible things that happen. So the source of funds to stop these things is why there's KYC, AML procedures globally from regulators and from bodies that build that. So crypto and ICOs are just a new asset class. It didn't exist 10 years ago. So we have to have parameters that we haven't had, and I think I agree with you on that. We need new parameters to assess risks, but to understand, as an asset class, how this fits into the frameworks we already have.
Okay, fine. Jan, you operate a platform which carries out ICOs for issuers and also STOs. However, you also offer the full package, being not just KYC, but AML.
Correct.
There's a distinction between AML and KYC. And I think sometimes the audience need to understand that, especially ICO issuers.
So basically the way we've done it from a technical point of view is understand that what we are selling is a code stack. So what we've done is we do understand the difference between KYC and AML, and we've outsourced both the risk and the obligation to UK licensed identity verification and AML providers. And basically we're on a two-step process, the first step being identity verification, and the second step being then running that past our AML provider. So it runs past sanction list, PEP checks, and all the like dozens of lists there are in the world. From a general point of view, we see two general flavors of contribution or investment or whatever you want to call it in an ICO. The first is the retail investor, which tends to be that kind of 2 ETH to 5 ETH. So at today's prices, we're talking $400 to $1,000. And then you've got the larger investors, which are coming from funds, high net worth individuals, etc. What we do is we work with the client's legal team to set thresholds, at which point do we need that enhanced due diligence.
Exactly.
Obviously, a fund does not have a passport it can upload to a KYC platform. So you have to have a mechanism whereby the fund can be validated manually, following a manual verification for their source of funds and getting them whitelisted into the smart contract. So from a technical point of view, it's not very complicated. You just need to follow, the steps.
I'd also like your opinion on how you would reconcile old world AML KYC requirements with STOs and their peer-to-peer nature.
Well, STOs tend to be a bit of a different animal in that generally our STO clients tend to go for PIFs, which are professional investment funds. And the minimum ticket size for this is 100 grand. So anyone that qualifies as a professional investor and is going to, throw in 100 grand at a time is cognizant of the fact that they need to undergo a certain amount of checks, and these tend to be more or less manual sales. Nobody just enters into an STO. No one participates into an STO just because they stumbled upon the website and they think it's nice and they like the particle effect on the landing page. There tends to be a certain amount of client meeting the investor face-to-face, and then it's very much an offline sale concluded online, which is why, again, on our platform, we integrated a bank wire transfer, because a lot of these funds, they like the project. They are interested in, for example, a fractional ownership of office space, for example. They like the fact that they can enter into an illiquid market, like, say, fine wine, art, classic cars, specialist real estate, and then be able to liquidate on a peer-to-peer basis. But it's still going to be, to a certain extent, an old world transaction where you are meeting me, proposing the investment, and then we just execute over the blockchain.
When you have clients and they want to, they're still determining whether they want to carry out, you could say, an ICO or else an offer to the public, whereby they would require a security token offering. There's obviously a distinction, and this is why the whole regime was created, to provide clarity between virtual financial assets and regular financial instruments as defined in MiFID. Do you advise your clients on what would be the distinguishing factors between virtual financial assets and financial instruments?
We do generally. I mean, I'm not a lawyer. We have an in-house lawyer and we have partner legal firms that we work with for that.
Well, okay. Does anyone else know the distinction between virtual financial assets and financial instruments?
Well, these things are a new asset class. You have to look at as and I think this has been the problem that I have, and I've written regulation and I've advised guidelines now in a few countries. So if you look in Bermuda, it's you know, and other places, are we talking about cryptocurrencies? Are we talking about virtual currencies? Are we talking about crypto assets? I think we're talking about digital assets. So that covers a lot of things. It's not cryptocurrencies. It's like, you know, we have to take view of an entire new world. You know? And I think having a uniformed global approach where we talk about things like digital assets, not cryptocurrencies, is very important. Because then we can have standards that I think is important that the industry apply, but we can have, you know, regulations that manage what a digital asset is.
I agree. I don't think we should interpret what the token is based on the technology behind it, but more based on the rights attached to it. And a lot of people are coming here because they want to start ICOs in a regulated market, but they need to understand that there is a major difference between financial instruments and what we have defined it as virtual financial assets. One of the main things being the rights attached to it. Does it have a right to entry in the as a shareholder in the company? Does it give a coupon payment? These are all things which are very similar to financial instruments.
So this is the interesting thing. So you talk about a utility token or a security token, or maybe there's something now that's a hybrid. You know, we can't just think of things as financial assets going forward in this pure form, because, I mean, I look at things like utility tokens, you know, Bitcoin or Ethereum. What may have their characteristics of securities may not necessarily be security. So we need to have laws and regulations now that include new definitions that cover these things like KYC, AML in the regulations.
Which is what our regime has done. The PML FTRs are set to be revised, and they're going to include VFA issuers, VFA service providers, and so have our implementing procedures been revised to provide guidance notes to these service providers and issuers as to how to implement proper KYC and AML processes. More so than that, because I really want the audience to take this away, is that a VFA asset must have that utility function. And when I say utility function, it must have a payment function. It is the distinguishing feature between financial instrument and virtual financial asset, that and the rights attached to it, and the fact that it's exchangeable on crypto exchanges.
Also, if you just try to make money, you know, if you just have an invest, if you're trying to do an ICO and you just want to make money out of the fact you want your token to go up, then I think everyone understands that's a security, and you should be licensed in the appropriate manner. Exactly. So I think this is really important. It's like, you know, as an ICO, you need to understand it's like, you know, if it's going to be taken seriously as a new asset class, and we want, you know, institutional investors to come in, we need to have licensing of this phenomena.
I agree.
Just to give a quick practical perspective on this, generally, because you asked how do you guide a client, you know, whether their token is a security or a utility. What we see is when a client comes and they're interested in running an STO, they come cognizant of the fact that they want to run an STO. They come to us and they tell us, listen, we want to fractionalize this art collection. We want to create a bond on the blockchain. We want to create an asset-backed token backed by gold with a stable coin linked to the price of gold. So they come prepared, knowing that they're going to run.
But then the audience also need to know this, that wouldn't fall under the VFA regime. And that is what I want them to take away. It's not simply if you're using the technology, DLT, that's not going to make you fall under our VFA regime. It is going to be the rights attached to that digital asset, which will decide whether you are within our crypto regime or within regular financial services laws such as MiFID.
So I have a question of that, and maybe John could come in on this as it might fit into his ecosystem. I don't remember whether it was called Amazon Cash or what it was called, but Amazon at a certain point had their own, let's say, token within their system. And under your framework of digital assets, how would Amazon Cash not fall under how a utility token would be treated in that sense?
I think you need to have a look at the rights of what's attached. Are you talking about money? Is there an investment function? Is that token only been not to use
utility, pure utility token?
So what's a utility token?
The Amazon Cash would have been purely a utility because it only had a use within the ecosystem. You couldn't take it out of Amazon and use it anywhere else. You couldn't trade it on an exchange, and it was not fungible for anything else.
I'm not setting the regulations. I personally disagree with that. I don't think to be a utility you have to be exchangeable on a foreign exchange.
I agree on that because from a technical point of view...
It's not the sole requirement.
Correct.
You could be a virtual token, but to be a virtual financial asset, there has to be that, it's a sine qua non, there has to be that exchangeability factor.
Can have utility, but that doesn't necessarily preclude it from being utility token, right? So it can have, Amazon Cash has a utility, we all agree, correct? There is a mechanic where you can then get value out of that and put value into that. I think your question, I think it's valid, is how is this not, doesn't this be considered? And I think two things with that specific issue. Number one, timing, and number two, Amazon.
Actually, John, I'd like to jump to you on this as well, because you also, you're part of the CasinoCoin Foundation, and you've built a coin built on blockchain's revolution technology. And you mainly serve as gaming platforms. So you simplify the onboarding process and carry out the KYC AML procedures. Can you elaborate about how you utilize blockchain technology to carry that out?
I mean, just how we've approached it from day one, right? We went to the regulators and we asked them what they wanted. And so we've built this in. I think my favorite thing I heard from the scrum we had over here was Grant said, the market is going to dictate the conditions, and the market is going to dictate the regulations, I think, to an extent more than existing regulations, because existing regulations simply aren't made to handle this technology. And so I was very pleased to hear that. But that's kind of what we did. We went in and we said, look, what do you guys want? So we have things, goofy little features. I know.
I'm gonna have to stop you because they're giving me the signs. It's been very interesting. But we're about to get kicked off the stage. We can continue this elsewhere.
Yeah.
Thanks, guys.
Whoever wants
Cheers.
to. Thank you very much.
After